Hey there, welcome to the video. Got a brand new trading system, been doing a lot of research, and I came up with something that kind of blew my mind. So I'm going to share that with you today. Now, what if I told you I had a brand new trading system? Here are the selling points. Are you ready? It needs almost zero work to take the trades. I mean, people say that online all the time. It takes almost no work. I'm talking about an absolutely super small amount of time to take these trades. I mean, it's kind of embarrassing. Furthermore, it can be automated. Don't need to actually even press the buttons or take the trades. Okay. And the research shows it kills the market. And you'll see that. I'll show you the numbers. Over time, it absolutely mangles an index fund. Absolutely. Okay. But that's a long time, right? You can always go back far enough and something worked 15 years ago and it doesn't even begin to work now. And in fact, in trading systems, super common. What you see, and there's a reason for that, what you see is a system that works in the past 6 months, a system that works in the past year, but then you go back 10 years and it doesn't. And if you dare go back 15, it's a totally different story. The best people I've seen online and seen in person and worked with, they give out great stuff and they say it's lasted 5 or 10 years. And I get super excited. I always do. And then I check it for 10 or 15 and it's just like loser, 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 right? So you can do one or the other with trading systems. You can find something that works over 15 years and then check out the most recent years and all of a sudden 50% profit goes to 5 or 0. Or the other way, you can have something that works now and didn't work then. Do you care? Totally different topic. But what I'm trying to tell you about this trading system, which kind of blew my mind, is that it destroys the market over the long term. And as you'll see, it kills it over the short term. Just the same, right? Okay, I'm not done, but that's not all. It has half the drawdown, not of another trading system. No. It has half the drawdown of the beloved index funds. Half, right? So not only do you make more money, you have less drawdown. And I'll drive that point home in a moment. Oh, by the way, the back testing, 100% accurate. Don't need data. You don't need to buy anything. You don't need to convert the data. You don't need to worry about rollover. You don't need to worry about survivorship bias. You don't need to worry about anything, right? This is impeccable data. Furthermore, it has zero optimizing. Never, ever need to optimize. I didn't optimize a thing for 17 years. Okay? Is that too good to be true? It sounds too good to be true, for sure. But here are the numbers, and they're irrefutable, by the way. Do your own research as always. Okay. Here's this new system. Since 2008. Anything happened in 2008? Maybe the Great Recession, right? The most scary thing we've seen in our lifetimes, if you're even old enough to be around then, because it was a long time ago. Let's check it out. Here's the portfolio. If you just put a mere $10,000 in from 2008 to 2025, now that turns into $114,000. Good grief. That's amazing. How does our beloved index fund do? Blah. 63,000, almost double. Destroys. I told you. I wouldn't lie to you. That's an annualized return of 14 to 10, right? 14.6 to 10.9. That is a massive amount. Imagine if this were a $100,000 starting account, right? It's magnified tremendously. Standard deviation smaller, which means you get less movement in your results. Best year is better. Oh, and look at this. Worst year is way better. Oh, look at this. The maximum drawdown is about half. I mean, this is 2008 we're talking about. Have I made that point? This includes to all of 2008. And look at the drawdown difference, right? Massive. Doable, right? We had that this year. 2025, this happened. Okay? Moving on. Here is the growth comparison, right? You have your $10,000, and yes, 2008 was rough, but it barely went down to like $8,000. Look at the index fund, the SPY, right? Now, look at the index fund chargeback, and yet it never caught up to my new thing. Look at that. It beat it from day one. Okay. Again, twice the profit for about almost twice, not quite, almost twice for almost half. I mean, I don't know how better to say it. Okay, but like I said, you can't have your cake and eat it too. You can't have a system that works in the long term and the short term. It's so rare. I mean, it's very rare. I don't want to belabor the point. So let's just go back 10 years now, right? So that was 2008. This is 2015. Same system, same SPY. Oh, killed it again, right? Destroyed it. Standard deviation about the same. Now, okay, drawdown was a little higher, but it's a lot more return and still reasonable, right? Again, we had this year and nobody really bailed, right? So yes, we got a little comeback here, but still make a lot more money there. To me, I still like Portfolio 1 better, but again, I guess there's an argument, okay? And here's the curve. Now, oh, look, SPY beat it for a while, 2015, and then once it broke past, it's never, look at the gap widening. Holy moly, look at that. My new system is taking off, destroying SPY, huh? So it worked in the long term, and then it worked just in the past decade. Again, those are completely different market universes, right? Completely different environments. Yeah, pretty mind-blowing so far. Moving on. Well, let's cut it back to the pandemic. Another monumental event, of course. So since 2020, how has the system done? I mean, it's beaten the market. Look at that. It's a horrendous amount of beating. The fight should be stopped. All right. Look at the drawdown, about the same. So it's destroying it in returns for nearly the same drawdown, right? And we know over the long term, it's a lot less drawdown when things really hit the fan. But since 2020, it's about the same. Okay. It's that, and that's far as worst year. Oh, wait. Look at that. Worst year is about the same, but oh, I spoke too soon. The max drawdown is actually less. Look at that. Okay. Here's the curve. Started beating it. Ooh, neck and neck. And then, oh, pulling away. Huge gap. So it worked in 2008, way better. And it's working in 2025, way better than in the next fund with less drawdown. Right? Most of the time. Okay. Again, it destroys the market over 17 years, over 10 years, and since the pandemic, which is roughly about 5 years. Again, an embarrassing amount of work. It's so little. And zero optimizing. I haven't done anything. Zero. Okay. Pretty compelling, right? Compelling and rich. So I've sold stuff. You've seen stuff on the internet. How much would you pay for that? Something that kills the market over all those time periods, right? It beats the market handily, and it almost always has less drawdown, at least according to the numbers. I mean, a typical trading system that I see, $29.99. But this one, the robustness, I mean, $49.99 seems very reasonable. I've seen $10,000 systems that don't have the numbers of this, right? Well, my friends, what if I offered this to you for, I don't know, let's $7.99? $7.99 is a lot less than those numbers. I think that is a fair price. And I could do that. I could keep this a secret, offer you that price, and then give you what I'm showing after you paid me, right? Or you could just buy equally weighted positions in Walmart and QQQ. I'm sorry if that disappoints you. This is the magic system. 50% in Walmart, 50% in QQQ. Now, people will freak out. And I wrote about this also, right, in my free newsletter. And I got emails saying, what else did you do? No, I didn't do anything. It is legit. Oh, by the way, I didn't show this test. It also beat it over the past year too. So just keep that in mind, right? Let me show that again. Since 2008, this does this, 10 into $114,000, and look at the max drawdown difference, right? There's no optimizing in that because all we did was press buttons and do 50%, 5,000 or 50,000 or 500,000 in Walmart, 500,000 in QQQ ETF. There is no work because I didn't press any buttons. And the data is perfect because it's stock market data. Then go look it up. You don't need to buy anything. Go look it up anywhere, right? It killed the market. Killed it. And by the way, it's not the only one. I found several versions, some of which I even like better than this, right? So think about that. Look at all the things that we talked about if I were selling a trading system, right? Do you remember all the selling points, right? Can be automated. I mean, that sounds like an absolutely ideal trading system, and yet it wasn't. And yet, on top of that, what trading system could ever put up the numbers I just put up? Seriously. They're out there, but find me one, right? It would be pretty hard, if not impossible, to find, right? Something to think about, right? Like I said, I have multiple versions of this that I've been researching and all sorts of things that might be mind-blowing and might be helpful and might be something you can actually use with verifiable data and not a lot of work, right? I do have a dividend income program for things like this. It's not just for income. It's for also other ways to make money in real life. So see information in the description. Hope you found that interesting. Bye for now.